What kind of evidence do you have that non-crypto users actually kind of want that self-custody payment experience?
I don't think it's about self-custody. There's a bunch of expectations. And the only way for you to do this is with composable finance. Tangem Pay essentially allows this composability. We are setting the first composable offer, and then we are going to increase the number of pieces that we can add to that composable offer, making it relevant to hopefully the 8 billion people out there. I don't believe in custody anymore for the practical reasons that you don't get the max out of your money, and soon people will understand that.
So I think you've described Tangem before potentially becoming a DeFi bank. What does that actually look like in 5 years?
Great question. So
just to start, could you introduce yourself to people who may not know you and what you do?
Sure. So I'm Marcos Nunes. Been in payments for quite some time now. Previously been part of a very large fintech in the UK called Teya. Before that, or after that, founder of Nozis Pay, and now CEO of Tangem Pay.
Mm-hmm. And I think we met, well, not me, but you met with CCN in Florida last year.
Correct.
And there you said that Tangem Pay was built kind of to build 8 billion people. So what kind of evidence do you have that non-crypto users actually kind of want that self-custody payment experience?
I don't think it's about self-custody. Again, maybe one step back from that is I think people need to move their funds, and they want the easiness of moving funds. They expect to be safe, and they expect to get the best return on their money, the lowest fees. So there's a bunch of expectations, and the only way for you to do this is with composable finance. And the only way to do composable finance, if you are in a DeFi world, where you can actually disassociate custody from offering. So I can then plug in a legal, I like this provider, I like that offer, and then you can, associate your money and your products with those providers and companies. So Tangem Pay essentially allows this composability. We are setting the first composable offer, and then we are going to increase the number of pieces that we can add to that composable offer, making it relevant to hopefully the 8 billion people out there. And if 5 billion or 1 billion or 5 million use it, it's more about us building the brand and being capable of reaching out to everyone and explaining our offer than their interest. Because either with us or with someone like us, they will be in this composable space. I don't believe in custody anymore for the practical reasons that you don't get the max out of your money, and soon people will understand that.
So I think you've described Tangem before potentially becoming a DeFi bank. What does that actually look like in 5 years? Are you kind of replacing banks, or is it kind of a new layer within the system already?
Great question. So I'm a believer that we have lived up to 2.5 generations of banks. First generation was about, I need to put money in a place that is safe, and I need to access that money whenever I can. And that was the traditional concept of banks. Then they have the digital era that transformed them from, just branches into access those banks anytime, anywhere by doing mobile banking. And then the 2.0 version came when the fintechs, the neobanks surge. How did they surge? Was essentially because they had a great user experience in the front end. So instead of just, depositing, I could check for offers and products in my app. And the flaw of that was essentially same old systems, same old methodology. I take care of your money. I take a piece. I take the majority of that piece of what I get back from that money, and I give you a little piece from it. I do a bunch of leverage to grow my business as a bank on top of your deposits. So that generation, I call it 2.0, 2.5 because you have different versions of it. But the 3.0 is the true separation of asset under management and access. So, in my view, the bankroll of today, not even tomorrow, today, is about providing people with the access they need in order to do whatever they need at their own time. You know, so I think the winner of tomorrow's race will be the financial app that provides any type of access to any type of financial product at your own time. So is Tangem replacing the banks of today? No, I think the banks are losing, their relevance by just providing their own offers and their own returns. So I don't think we're helping or doing anything different in that sense. I think what we're doing different than the rest is that we're building this composable offer, and this composable offer will very soon um, make it more relevant to users. And I think it is already. I see from the numbers from launching the product 3 months later, the adoption, it's a double digit every week growth. So it's we surpass like several millions in TPV in weeks. So I think it's just the demand is there, the users are waiting for it. So it's just yeah, growing the product and the things that you can provide with the product.
Mm. Yeah, it was last year, I think you said that you had a goal of reaching, I think it was 10 million users by the end of 2026. So obviously you've just said that the growth is kind of brilliant so far. Are you kind of on track to reach that number?
So there are two things. On the hardware wallet itself, we don't expect to reach that number. We expect to reach the number because we want to expand the things that we're doing within Tangem. They are becoming public very, very soon. And essentially, because of that new offer, yes, we're on track. And we see already the adoption in the Tangem Pay side. We see that the hardware wallet keeps increasing. Again, also, if Bitcoin drops, people buy hardware wallets. If Bitcoin goes crazy up, people buy hardware wallet. So I think it's becoming more and more common sense that you need to protect your money outside exchange. So I think when it goes up, people feel like they have a bigger reserve, so they buy the hardware wallet. When it goes down, maybe the exchanges will fail. So I need to move out of the exchanges. So in either way, people are getting more and more aware of the need for safe instruments.
How are you designing kind of Tangem Pay so that someone completely new to crypto doesn't feel overwhelmed?
That's my dad. So that's my Homer Simpson. So it's very difficult. I've been trying to do crypto payment for dummies for now 2 years. And it's really funny because I always feel like we're closer. But then again, you are so into the topic, it's very difficult for you to see how far are you actually from for dummies. And that's why I always ask my dad to do things for me. And he's the type of guy that he's a doctor, never really had a computer. So he kind of stayed away from tech his entire life. And I don't think we're close. I think Tangem made it easy with the seamless activation of the hardware wallet, no seed phrase. With the concept of putting money in an account, then swapping, and then bridging, and then spending. I mean, there's too many steps still. What we're doing is basically we're getting deposit accounts that automatically give you the right digital assets to spend with the card, and I think that is the closest we got so far. And I expect this to be ready this year. So once this is in place, I think people will be more interested on the non-crypto thinkers or the non-crypto lovers. They'll just simply say, I can deposit here and then I can spend from this money. Why would they do it? Then I have hundreds of reasons. Cheaper FX, a cheaper way to move money between borders, in a trip, rather than having your credit card, traditional credit card, you can actually have the digital currency from the country that you're going to. So then it's a cost story for them. So I think it's a combination of things. Our app is still very much for sophisticated users, not for my dad.
How important are partnerships like Visa and Polygon, for example, in accelerating kind of the adoption of getting that huge kind of traditional people over for dummies, etc., compared to building everything natively within crypto?
So first of all, I don't believe in building the infrastructure. That's why we do partnerships, especially with networks. I think, everyone that says I'm going to take Visa down underestimates the amount of money, the amount of effort. And, it's the same as saying, I'm going to remove all the water pipes in the world because they're made of a certain material and there's a new material that is better off. You can, but it will take you generations to fix this problem. And I'm not here to defend Visa, but I think what they have done is tremendously great. And we should be thankful because that's a very easy way for you to, move countries and spend in those devices that really talk with one another seamlessly, very effectively. And there is a very clear rule for this transaction to happen. Just for the audience to kind of understand where I'm coming from, imagine that every transaction is a contract. Someone wants to buy, someone wants to sell in different languages, in different jurisdictions, in different countries. And then, if you do not get the goods that you were told you're getting, you're allowed to charge it back. And there's an insurance policy for that in every transaction. And Visa is the Supreme Court, or MasterCard is the Supreme Court of that transaction. And, it's replacing the tech. There's a ton of better tech out there. Replacing the tech in the merchant is very difficult because merchants don't care about their fees. I've been in payments too long, done too many studies to understand that they don't care. They would just increase their price by 3, 4, 5% to cover whatever fees. What all they care is the reconciliation. Everything they sold, they're receiving. And everything, in different currencies, they receive in the currency that they can actually live on the day-to-day. So there's a bunch of things that are not tech-related that has been solved by that one network. Then when you look at Polygon, similar. You need to move funds. You need to, ensure that money goes left and right, cheap, scalable, secure. Is there other networks good out there? Definitely. I think this is a good one to start with. It's not as strong as the Visa position, but I think it's a good partner. So you don't build infrastructure, you build the relevance to the end user. And for me, that is basically, again, if you're in the business of transactions, no longer deposits, I need to create the relevance for transactions. That means I need to be plugged into as many partners as possible so users can transact. And I can only make money if I charge very little in every transaction, to the degree that people don't realize there's a cost. And in fact, when they see the cost, they feel like, why am I still in my regular bank? And I can actually do everything with, cents on a transaction rather than percentages on a transaction. And so I am in, if you go back to 2005, when Google created the Google Ads, and it was all about clicks, right? So the business of Google was click. If you've been to any business university or any business course that talks about Google, it's all about the clicks. So they wanted to do a Google Wallet, not because of the transactions, but actually they wanted to understand customer behavior. Customer behavior generates more ads. Ads is actually the money. We're in the business of transactions. And I can only succeed if I understand how to make make more transactions.
So with USDC as kind of the core settlement asset, do you find yourself having to kind of answer questions about how you're mitigating risks around centralization and kind of regulator constraints when it's all about kind of stablecoin?
We received some criticism around what is Tangem, if they really want to do full non-custodial things, you need to be connected to non-custodial assets, and we should be able to do non-custodial transactions. You have to separate the two worlds, right? One is my wealth. Back in the days, a lot of us are exposed to offshore accounts and tax optimization plans to ensure you can live with the minimum or the most efficient way of paying your taxes. Let's put it like that. Yeah. With crypto, it's not a new world. It's exactly the same. You're exposed to a life where you can optimize your taxes. So that's one element of the story. Then there's the privacy. Then there's a bunch of things that people are sensitive to it. I get it, fine. But let's park. That's why we created the hardware wallet, the Swiss safe, that you actually put your money there. I don't care, what type of good you're interested. All I need to do is to make sure you will have the ability to store your type of interest. Very safe, very secure. All right. Then that's your wealth conversation. You don't carry your wealth in the same instrument that you spend. In the spending, it's about, the economy that you participate. I participate in the British economy. All right. What are the rules to participate in the British economy? What are the things that we gotta do in order for you to have a very simple step between your wealth, your offshore wealth on chain, to actually spending your money in the real world economy, or that actually economy you chose to participate? Then you have certain things that you have to fulfill, like KYC or whatever. But most importantly, I understand who you are, right? The know your customer, as I know who you are, and I understand how you want to bring your money to that economy that you want to participate. And once you bring it, it should be very, very simple, not 600 pages of documents and asking basic questions. What's the color of your eye? Where do you live? Even though I know where you live, where did you make your last deposit? Like a bunch of scrutiny, which makes no actually better experience, neither more secure, neither less fraudulent. It's way easier to monitor transactions these days when you decide to come to the traditional world with blockchain technology than the flaw, old legacy COBOL mainframe from IBM, which it's the main tech in the banking world. So to now talk about USDC or other onshore, like you need certain digital assets that are talking to this spending orientation of participating, in these economies. They need to be connected. So USDC is per definition a custody. USDT is actually a custody stablecoin, right? It's not non-custodial, whatever, because they are essentially both parties can actually seize your money if they want. If they will do is something else, but they. So I don't think we're going to be out of someone in particularly being able to seize or take it from the user, because money will always be under a real economy regulation. So right now we choose USDC for the convenience of USDC is the most, accepted onshore. USDT, everybody knows, is already in conversations to have the onshore USDT. So we're going to make it data practice as well, and many others. So I don't want to be the one that says, I use USDC, you should use USDC. Right now, for the simplicity, trying to attract my dads that do not understand that you have, look at the difficulty. You have US dollars only, which is a bill that you can see. You put it in your bank, it's there. USDC, you have it in Polygon, Solana, Base, you name it, Ethereum mainnet. If you buy one and not the other, and we don't enable that in your account, it simply disappears. So it's already very difficult to explain to the user that USDC is not one USDC. There's like way many variations of that USDC. So that's why we're kind of limiting the number of currencies or the type of currencies, the type of networks to deliver that Homer Simpson experience first. And then how do we scale from that is also based on user demands. But I can see a bunch of things from my user. The number of people that actually are spending with the card, the amount of USDC flowing from a Polygon network to the card is 1% only. That means the majority of our users do not hold assets in Polygon. And do I want them to transfer? Do I want to adapt to another network? Do I want to bring? Those are all things that we're, monitoring, because if they don't have the cost and if it's truly separate from their wealth, it shouldn't matter if it's Nozis, Polygon, Solana, Base. It's only where I can get the cheapest settlement price, the $1 effect. If I deposit 100 USDC, I should spend 100 USDC. It's secure, it's safe, I won't lose it. There are many other things that I think is priority for the user before, considering different currencies or different networks.
Yeah, okay. Just shifting slightly, what inspired the idea behind the Tangem Ring? And how do you see users kind of interacting with it day to day alongside kind of Tangem Pay?
I am very excited about Tangem Ring in general. Probably I'm one of those crazy about it. Because first of all, the convenience of, I often forget my wallet. I remember when we start talking about this in 2015, 2014, when contactless came and people were, started with, you're not going to need your wallet anymore, blah, 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 blah. And I would never forget my wallet and my house keys. And now I don't even know where there's a wallet for weeks, right? The problem of Tangem is the card sits in the wallet or in the safe. Ring, I mean, you don't. It's always in your finger. I normally take to sleep because I don't want to have it during my sleep. But if not that, it's always with me. So again, my wealth and the keys to my wealth in my hands at all times. then I can just go and say, now I can move to spending in just that little portion or that big portion, or and what people are going to see is Tangem Pay is not about the card very soon. It's about spending, and spending is paying rent, paying gas bills, energy bills, internet, and making money programmable and accessible. It's always going to be about, I'm obsessed about talking about access, access, fast. And I see a lot of our competitors talking about 10% cashback. If we are able to help you optimize your taxes, I'm pretty sure it's bigger than 10% cashback. So I don't want people to come to us because they get this funny 10% cashback, which is money, but it's not really money. It's a minted coin, whatever, and that will have some sort of liquidity at a point in time. So I think this is not the type of user. I'm thinking about the largest DeFi private bank in the world. And private bankers, I've been with traditional private bankers for some time now. It's all about optimizing their clients' lifestyle. So that's what we want to do.
Do you find that when it comes to kind of a device like a ring that people think, like, change the way they think about security? Or do you find that there's just kind of the same level as kind of a traditional hardware wallet? Did you guys have to think differently about the kind of a wearable form factor when it came to security? Sure.
Well, we had to think very different because you need to adjust a bunch of security elements inside of a ring. A card is already easy because you have contactless payments. So, you kind of have a bunch of that out there. Meaning, and what do I mean with that is like the antenna, the NFC, the amount of distance you need to be from a device in order for activating the chip, which is the secure element in a card. So, you have common criteria as a standard. You have the traditional ISO standards. There's a lot for a card payment. It's been around since 2001, contactless payments, right? So 24 years, 25 years. A ring, which is a wearable, has been around since 2018, 19, wearables in general. But again, they have patents, they have very different ways of interacting with devices. Sometimes, it works well, sometimes not. I want to make sure that we make Tangem Pay activated with the ring. So you don't have even to use your phone anymore. You can just go and tap your finger. But we're almost there in those things. So I again, it's really exciting the amount of things we can do, because a lot of stuff is out in the market, but it was never patched in a way that you have very deep experience on tradition and very deep experience on chain. And I think that's the Tangem Pay lucky side of things. We are very knowledgeable on the security side for everything we have built. I brought a team of experts from payments. I've been in payments myself. I've been a board of advisor to regulate payments in the globe for many years. I've advised, banks, issuers, acquirers, processors, gateways, terminal providers, wearables, in over 50 countries. I built operations in 33 countries for 9 years, only doing this. So I think we were able to bring the best of both sides, and now we're shaping in a way that it almost to become seamless in both worlds. So I think the ring is just a good evidence that we can help my dad.
So yeah, just to finish on them, where can you see Tangem and Tangem Pay being in, say, a decade, 10 years? Where do you hope to see it?
I think the name Tangem Pay is gonna drop at one point. It's just Tangem. Um, um, we have three verticals now in Tangem. It's the Tangem hardware wallet or storage, the Tangem investment and access to all sorts of things you can do with your money, which we call it growth. And then you have the Tangem Pay, which is essentially the spend. And then you have within Tangem Pay financial rails accesses. So, for instance, like IBANs and ACH wire or Pix in Brazil. You have the different partnerships with stable providers. So it's in 2 years from now, I don't even think 10, because it's too far away, 10 years these days, especially with AI. 2 years from now, I expect us to be Tangem. And what Tangem is the financial apps that operates at your own speed, at your own time. And in a way that you're not questioning what's hardware wallets, what's seed phrase, why do we need to know all of those geek terminologies if all I need is a place to store my money, access it, and use it, without having to go through billions of forms, without asking, can I spend my own money? I think it's so bizarre how we evolved as society globally. Banks were begging for you to put money on them, and these days banks are saying, I can only give you X amount of money per day of your own money. So it's just insane. You have to call them, do a bunch of things for them to give your money because they don't have the liquidity. So I think we have reached the peak, and I don't think it's going to be acceptable anymore. Such thing. So in 2 years from now, I expect us to be there from a user experience point of view. In 10 years from now, I expect us to say, do you remember back in the days we used to talk about the security part? It's like, oh, wow, that's crazy. I think it's much more about, how come you're not plugged into the yields that, is connected to the risk portfolio and the last risk portfolio based on XYZ policies. And it's going to be so granular, especially RWA coming in. I feel like those that understand this are going to make generational money in the next 5 years.
Perfect. Well, exciting times ahead. And thanks again for meeting us. That was a great combo.
No worries, Kurt. Thank you very much.